Good evening. Welcome to Markets Today. I'm Lata Venkatesh. With me is Ekta Batra. And the color of the markets was nothing like Ekta's jacket at all. It was green all over, and it was expected to be. We had a very big rally coming in from Nikkei, a 7% rally. The Japanese markets were reacting to the overnight Wall Street rally, as well as strong cues coming in from China, from the Chinese stock markets. And that led to this very big gap up opening in India as well. The gap up has been maintained, but the question now will be whether India can build on this, or whether this will be more or less, well, a dead cat bounce would be a strong word, but not much to build on from here on. Hi, Ekta.
Hi, Lata. Absolutely. It was a sparkling session for us. We had a broad-based rally. We had commodities, we had autos, we had the bank Nifty. All of them participate on the upside. These are top stories we're tracking this evening. The pullback continues on Dalal Street thanks to strong global cues that we're seeing. The benchmark indices put on 1.7%, with the Nifty closing above 7,800. The Sensex put on 400 points. Metals, realty and bank stocks led the charge.
Back home, telecom stocks gain as the cabinet approves spectrum trading. The government is to levy a 1% transaction fee on the buyer, while the amount received by the seller will be counted as part of the company's adjusted gross revenue. The cabinet also clears the gold bond and the gold monetization schemes.
Mid-cap see high beta bounce back with gains in stocks such as Suzlon, JP Associates and Amtech Auto. Mid-cap pharma stocks such as Torrent Pharma and Divi see some profit booking. The new listing, Nafkar Corp, goes home with gains of over 8%.
Well, those were some of the headlines that dominated the street, and here are some of the experts that we have lined up on the show for you. First, we will get you a whole host of experts from JP Morgan India. We will have Bharat Iyer, the strategist. We will have Sajid Chenoy, the chief economist. And we will also have the take on the markets from Nilesh Shah of Envision.
Okay, well, we will also now start talking about the markets. It was in fact a spectacular, sparkling, whatever adjective you want to use, surge in the Nikkei or the Tokyo markets, which in fact lifted sentiment across Asia, and India was no exception. The bulls rallied for the second day, running to help indices reclaim crucial levels. Anuj Singhal joins in to take us through the day's market action. Anuj, a relief rally continues then.
Oh yes, the Asian markets did remarkably well today. Nikkei in particular was surging in trade, and we saw that impact in other Asian markets and in India as well. Century day for second day running for the Nifty. In fact, in 2 days, the Sensex has gained nearly 900 points. So that's telling you the kind of short covering bounce that we have seen. The better thing about today's trade compared to yesterday was that today was more secular in nature. Yesterday was essentially a large cap driven day. Today was a day in which almost all sectors, all stocks participated in trade. The breadth was positive in today's trade, and metal stocks for second day running rallied on back of global cues. So let's talk about some of these stocks. Right on top, of course, all the metal names. NMDC surged 9% in late trade. Hindalco was up 8%. Vedanta was up 7%. All index names, all of these stocks did well. In fact, entire commodity pack did well today. Tata Steel was up 5%, Cairn was up 4%, and even cement did well. Ultratech up about 3.5%. Some other prominent gainers today, two auto stocks, Maruti and Tata Motors, both of them up 4%, and Reliance gained quite a bit in late trade, so that stock was up about 3%. Not just that, you had some other notable winners like Infosys, which was up about close to 3%. Asian Paints was up 4%. All the telecom stocks did well. Idea in particular was up about 2.5%, though it came off the intraday highs. In the mid-cap basket, well, you could pick any stock. Most of the stocks were doing well today. Stocks like Chennai Petro, Reliance Communications, Amtech Auto, all up 12%. Not just that, Suzlon, NCC, both these stocks were up about 9% and 7% respectively. And the new listing of the day, Navkar, that also did well, up about 8%. So, you know, the short covering bounce is done. The key would be, can the market sustain from here on? And a lot of that will depend on how global cues shape up. As of now, it looks like you know, most of the short covering bounce is done, and now you'll require fresh buying to take the market higher from here.
All right, point taken. Anuj, thank you very much for joining us. Well, let's tell you also about Asia. Shares across Asia were sharply higher today. The Japanese Nikkei, as we just told you, surged by 7.7%. That's the highest one-day jump in 7 years on this index. Sentiment was boosted after Prime Minister Shinzo Abe pledged to implement a corporate tax cut in the country. The Shanghai Composite in China jumped 2.3% today, while the Hang Seng in Hong Kong soared over 4%. The South Korean Kospi went home 3% higher, and the summer Davos meet in China's Dalian kicked off amidst a slowing economy and a sputtering stock market. A ground report is coming up for you later on in the show. Well, that impact was obviously seen in the Indian markets as well. As Anuj just explained to you, there was this huge rally we saw in the commodity stocks. So basically, whatever was global facing, commodity stocks, IT stocks, and the Bank Nifty, which has been moving in tandem with the commodity stocks, also saw the surge. The other pockets of gain were coming also from stocks like, gold stocks, jewelry stocks, which one thought would be advantaged by the gold monetization scheme. More on that later, but my own sense is that there may be a little more of legs to this rally. We've seen this extraordinary numbers coming in from the indirect tax collections. That would perhaps have a little more of steam to push the markets tomorrow, but it's difficult to see whether there will be enough legs to take this market past 7,900 or anywhere near that 8,000 mark. Caution also because some of the stocks that rose today were a bit questionable. While one could take, well-hydrated stocks like NCC, for instance, in the infrastructure space, which is not extremely debt-dominated, you started seeing gains even in stocks like Lanco Infratech, in Amtech Auto, in McLeod Russell, which has not had a very good run. So some of the stocks that were running today will start posing some questions about the quality of the recovery as well.
Yes, absolutely. Well, let's see whether that's sustainable or not. But it's time to bring in our first market guest for the day. Bharat Iyer, Head of Equities Research at JP Morgan India, believes that the Nifty will pass 9,000 levels by the second quarter of the next calendar year.
Nifty level, I think by the second quarter of next calendar year, probably we take out the 9,000 high on the previous 9,000 high on the Nifty. Our base case is that Indian equities deliver returns of about 10% through to March, April next year. This is going to be a year of consolidation after the 30% return we saw last year. And beyond that, we wouldn't be surprised to see returns in the region of 15 to 18% for the next 3 or 4 years. I'm not making a distinction here between private and public. I'm making a distinction between quality and, not very high quality. So, you could have, banks in the private sector which are very high quality and which are not so high quality. And likewise, even in the state-owned banks. So, the distinction for us is in terms of quality, not in terms of whether it's state-owned or whether it's in terms of private sector.
Well, so 9,000 is Bharat Iyer's target for the Nifty a year down the line or so. However, Nilesh Shah, the Managing Director and CEO of Envision Capital, expects the Nifty to reach 13,000 to 15,000 levels, though of course he's speaking of a slightly longer term. Listen.
I think we will unfortunately have to be focused more about how global events pan out over the next few days. And I think that will basically decide the course of the markets maybe for the next 2 or 3 months. The next 3 to 5 years, we would probably be even maybe 100% higher than where we are today. So if we're today at 75, 7800, is there a chance that we could be at maybe 13 to 15,000 Nifty in the next maybe 3 to 4 years? The answer is yes.
All right, let's move on to some sectors and stocks in news then. Days after allowing telecom companies to share their spectrum, the cabinet today waved the green flag to trade them as well. This, in fact, has been a long-standing demand of telecom companies and will now help them monetize the spectrum that's not being utilized by them. Telecom companies shot up in trade soon after the move was announced. In fact, like you can see on your screen, Reliance Communication rallied the most as the street expects the company to sell some of its airways, which eventually would possibly help in terms of deleveraging as well. Here's the Telecom Minister, Ravi Shankar Prasad, explaining the spectrum trading rules.
ट्रेडिंग और शेयरिंग के आने के बाद जो सबसे बड़ा फायदा होने वाला है, जो कॉन्टिगुअस स्पेक्ट्रम को लेकर दिक्कत होती थी, तो उसको सुविधा मिलेगी ताकि सर्विस अच्छी हो। और दूसरा, ऐसे बहुत सारे प्लेयर्स जिन्होंने स्पेक्ट्रम लिया था लेकिन कंज्यूमर बेस नहीं बढ़ा सके, तो their spectrum has become a dead asset. तो उसका उपयोग कर सके तो ये बहुत ही revolutionary step है.
Right, let's go straight away to Reema Tendulkar, our colleague who tracks telecom stocks very closely. Reema, tell us, do all these companies start to benefit?
In an important decision for the telecom sector, the cabinet today has approved spectrum trading norms by which a telecom operator can buy or sell airwaves. However, a few salient features, only liberalized spectrum can be used, which means spectrum which is given at administered prices cannot be traded. Secondly, it appears that it will be a bilateral transaction between a buyer and seller, which means only these two entities will decide the price. A telco can enter into a trading agreement by giving the government 45 days of advance notice. Now, overall, spectrum trading is positive for the sector because it will aid in consolidation. It will allow efficient use of spectrum. So, of the players, it appears that only the big ones like Bharti, Idea, Vodafone, Realty would be potential buyers of spectrum, while all the others will be selective sellers, which means, for instance, if Aircel or Reliance Communication have unutilized spectrum, then they would be interested in selling or trading it. The question is, will spectrum trading make M&A redundant to some extent? Because now you have an option to go ahead and buy spectrum without taking on the attending debt which is there in most of the telecom operators. And trading will also help the sellers to get the highest possible price for the spectrum. So, the question is, when you have trading as an option, will M&A really take off? And the other thing is, a little bit of a limiting factor could be the fee structure. Right now, the buyer has to pay a 1% transaction value of the market price, whichever is higher. So that is not going to be much of a problem. It's the seller for whom the transaction fee will be used to calculate their AGR or adjusted gross revenue, on which the government will charge a license fee as well as spectrum usage charge. License fee is 8%, spectrum usage charge is roughly 5%, which means 13% of the transaction value will go to the government. So this fee structure reduces the attractiveness of spectrum trading. But overall, net, all things considered, it's still a positive.
Separately, the cabinet also approved the national offshore wind energy policy, which will provide the roadmap for setting up wind farms on the sea surrounding the Indian coast. Mangala Malu is here to tell us what it could mean for some of the listed stocks in the energy sector. Mangala.
Thanks a lot for that. Among the other approvals coming in from the CCEA, one of them was the approval of the National Offshore Wind Energy Policy. Now, what this does is actually paves way for offshore wind energy development, also setting up of offshore wind power projects and research and development activities that will be carried out within 200 nautical miles from the Indian seashores. Speaking on this, the Power Minister Piyush Goyal also said that the generative capacity of Gujarat coastline alone is in excess of 1 lakh megawatts, and that of Tamil Nadu coastline is close to 60,000 megawatts, and if we interpolate that to the whole country's coastline, it would be a substantial chunk of energy generative capacity, on the back of which stocks like Suzlon Energy, Inox Wind and Indo-Wind Energy also surged. Suzlon Energy, in fact, will be the biggest beneficiary of that, considering the company already has a few pilot projects running for offshore wind energy development. Back to you.
Okay, Mangalam, thanks very much for that. Well, in terms of one of the other cabinet decisions, in a bid to in fact stem India's insatiable appetite for gold, the cabinet also announced a monetization and bond scheme. So here's how it works. People can buy gold bonds which will earn interest instead of physical gold. Lata, what's your sense? Do you think that there'll be any takers for this, and would people like you and me actually go and invest?
Well, we have to understand that there are two schemes. The gold sovereign bond scheme is more like a gold ETF. That really doesn't have any connect with the listed gold players, a PC Jewelers or a Titan. Has nothing to do with this. This is just a gold ETF scheme. Instead of going to a private ETF, you can buy a sovereign bond scheme. Will this reduce the gold imports? I'm not so sure. Because if the government is running a sovereign bond scheme, you've invested and 1 year later you get a gold price related return, the government has to hedge it. So the government will have to buy gold. It doesn't really reduce the national imports. What about the gold monetization scheme? Is it that a PC Jeweler or a Geetanjali Gems or a Titan can therefore get gold cheaper from the banks? Not so. At least according to my sources in the gold industry. At the moment, a Titan or a Geetanjali can get gold at lease rates which are linked to LIBOR, So they're able to borrow at, they get a gold lease at about 5% or 4% or 3%, depending on whether you're a AAA borrower or a AA borrower. Now, if I, as a person with jewelry, wants to, go to a bank and give it as a deposit, if the bank itself has to lend it at only 3% or 4%, the bank will pay me 1%. Now, why will I sacrifice the making charges of my jewelry and allow it to be melted, all for a 1% return? I might as well allow it to remain idle in my, gold locker, in my bank locker. I wouldn't want to sacrifice it. Who will sacrifice it? A person who has gold biscuits or gold bars. That is likely to be unaccounted money. That person is not going to go and give it in the bank because he will be afraid that, it is unaccounted money. The people who will do it would be temples. But that scheme is available. And, SBI has been running this scheme for like 2 decades now. The temples have not shown that much interest. Will the BJP government be able to enthuse the Padmanabha temple in Trivandrum or the Balaji temple in Tirupati to go and give their gold? So far it has not succeeded. So anyway, for this listed companies like the Gitanjalis and the TBZs, some of them ran up like 11% today. I think that was just speculative run up. I don't think anything changes for them.
Okay, well, that's thanks, Lata. Well, that's coming in on all of the announcements from the cabinet. Time for a break now, but coming up, Sudarshan Sukhani joins in to talk about the technicals, and we'll also get you a trading idea for some trading ideas for tomorrow.